airplane manufacturer and seller and defense contractor Boeing has seen its share price fall in recent quarters and recent years, given the company's struggles with plane quality and given the company's troubles with regulators. So, understandably, investors are poking around trying to see if this is a buying opportunity on the dip and what's a fair price to buy Boeing shares. I'll answer that question in this video doing the discounted cash flow value of Boeing business. So let's jump in.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So let's start with the section in green here, which evaluates Boeing's free cash flow expectations over the next decade and over the long term. So in 2024, it was an absolutely miserable year for Boeing. The company's free cash flows were negative $14.3 billion. The analysts on Wall Street that are following Boeing, they expect 2025 to be another miserable year, but much better than 2024. They expect the free cash flow to be negative $4.9 billion. Those are expected to turn around starting 2025, where the analysts on Wall Street expect Boeing's free cash flow to jump and become positive again, $5.4 billion, and soar from then on out, jumping to $9.4 billion by 2029. Now remember, Boeing's business, its sales are pretty much locked in for a decade. Well, I would say a decade or more. If you're a new customer right now that wants to order a plane from Boeing, you probably have to wait at least 5 years to receive your order, unless they offer you some kind of deal where you pay a big price premium to jump to the front of the line. Boeing has hundreds of billions of dollars in backlogs of orders of planes that it's expected to deliver over the next decade. So this company is one where the analyst on Wall Street can have a pretty good idea of what the free cash flow is going to be like over the next 5 years, over the next 10 years. That is, of course, if Boeing avoids any kind of disaster like they experienced over the last couple of years, where the quality of the planes led the regulators to force Boeing to pause or slow down production of their planes, which pushes out those cash flow expectations into the future. Now, there's a lot of fear that Boeing's difficulties would lead to some customers canceling orders, and I haven't seen very much of that. Sure, Boeing may not be receiving as many new orders given its difficulties, but I haven't really seen a major reduction in its backlogs as a result of its recent difficulties. So from 2029 to 2034, I forecast Boeing's free cash flow will grow from 9.4 billion to 13.5 billion by 2034. From 2035 onward, I expect its free cash flow to grow at a nominal rate of 5% per year into infinity. Now, Boeing's free cash flow can grow at that rate because that's the rate where developed economies will likely grow at into infinity, nominally, not inflation adjusted. Looking at Boeing's terminal value, which measures all of the free cash flow expected between 2035 and infinity, that totals $248 billion. So what I've explained so far is all of the free cash flow Boeing is expected to earn in the future. Money in the future is worth less to us than money today. So we need to discount all of that. The price that it's worth today, I have underneath the forecasted free cash flow. You can see these individual numbers. For example, in 2033, the present value of the cash flow expected in 2023 is $5 billion, even though the actual value is $12.5 billion. I had the most difficult time understanding this when I was a student at university, first learning this concept of the time value of money. I kept asking the question, how can you tell me that $12.5 billion is actually only worth $5 billion? That just had such a hard time getting through in my head. But today's students, when I'm teaching this concept at university, I'm teaching some of the same courses that I took at the same university that I went to. And the students get this concept really quickly and really easily, to my surprise, even though it was so difficult for me to understand. So you might be one of those like me that's having a difficult time understanding it, or you might be one that can easily understand it. Yeah, money in the future is worth less to me than money today. And so I can understand how $12.5 billion in 2033 is only worth $5 billion to me today. So in total, all of those cash flows expected from Boeing in the future, if we brought it all back to today and got the present value of those cash flows, it will be worth $134 billion. Okay. So the discount rate I've used for Boeing is 10.71%, the weighted average cost of capital. I've given Boeing a cost of debt of 7.5% and a cost of equity of 13.92%. To get the cost of equity, I used the capital asset pricing model, which incorporates a beta of 1.57, a risk-free rate of 4.5%, a market risk premium of 6%, a market cap of 132 billion with total debt at 57.6 billion. And so I gave them a target capital structure of 50% debt and 50% equity. Now, usually a business like Boeing, with its share of revenue from orders, backlogs of hundreds of billions of dollars, and a government business, defense contracting business where it's relatively safe, not connected to economic growth, it would have a beta that's much lower than 1.57. But Boeing's shares have been more volatile in the last year, year and a half, 2 years, even if you go back 5 years, because of, first of all, the unprecedented circumstances of the pandemic, where its planes had to be parked. And then you had the incidents in the air when the door was opened, and that created all kinds of difficulties with regulators, and the company had to slow down production of its planes. So all of that has led to unusual volatility in Boeing shares. In the red section, we start with the value of operations we calculated earlier of 134 billion, add the company's cash, reduce the debt, and you get a value of equity of $87 billion. If you divide that with the number of shares outstanding of 618 million, you get an intrinsic value of $141 per share. Current market price is $180 per share. So according to my calculations, Boeing stock is overvalued at the moment. But I can see the shares becoming undervalued as the riskiness of the business decreases, as the company makes progress with regulators to get approvals to ramp up production, as the company puts behind it these years of negative free cash flow and makes progress towards turning positive on the free cash flow basis again. I can see the riskiness of the business decreasing, the volatility of the stock decreasing, and the intrinsic value per share increasing, maybe when I update it 6 months from now, 12 months from now, if the company does indeed make the progress that is expected by Wall Street analysts. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.